Today, we're diving into the exciting and sometimes unpredictable world of stock market investing. We know the markets can be a roller coaster, but amidst the chaos, there's a beacon of hope. Dividends. These regular payouts from companies to their shareholders can be a reliable source of income, especially for those eyeing a stress-free retirement. Before we get into the nitty-gritty, let's introduce the two stars of our discussion today, NNN and DMLP. NNN is a real estate investment trust with a massive portfolio of commercial properties across the United States. They're known for their impressive track record of increasing dividends for over 34 years. Think of them as a reliable landlord who's been consistently paying their investors more each year. DMLP, or Dorchester Minerals, LP, operates in a completely different field. They're in the energy sector, dealing with oil and natural gas royalty interests. This means they earn money from the resources extracted from the land they own or have interests in. Their dividends can vary but are often quite attractive, especially when energy prices are high. Despite uncertainties in the job market, rising borrowing costs, and fluctuating share prices, U.S. companies, including banks and utility firms, have been increasing their dividend payouts. In fact, dividends in the U.S. are on track to hit record highs this year. This is where these two picks, NNN and DMLP, shine. NNN has a massive portfolio and a commendable track record in dividend growth. They offer a yield of 5.4% and own 3,511 commercial properties across 49 states, covering about 35.8 million square feet. They have a high occupancy rate of 99.2% and have consistently increased dividends for over 34 years. They have also shown exceptional management, maintaining high occupancy rates and increasing their core funds from operations (FFO). They've managed their debt smartly and have enough cash flow to fund acquisitions without diluting shareholder value. They're like the marathon runner of REITs, steady and enduring. On the other hand, DMLP offer a significant yield of 11.4%. In a recent aggressive expansion, they added 2,184 net royalty acres in 3 states. However, with DMLP, you must note that their distributions are variable and are highly correlated with the volume and price of crude oil and natural gas in the form of royalty property sales and NPI, which is net profit interest. Also, it's important to note a big change in how U.S. oil and gas companies are operating these days. They're not increasing their oil and gas production as quickly as they used to. This is because the energy industry has learned from past problems, like when there was too much oil and gas available, known as a surplus, or when they didn't get much help from governments or other companies during tough times, like the oil crisis that happened during the global pandemic. All of this is also influenced by the growing focus on climate change and how we use energy. So now, these companies are being more careful about not producing too much oil and gas. This means the supply of oil and gas will be more limited, which usually keeps prices higher. If you have shares in DMLP, this situation could be good for you because higher energy prices could mean more income from your investment. Both these stocks present unique opportunities in the realm of dividend investing, but they operate in vastly different sectors with their own sets of risks and rewards. NNN, with its impressive portfolio of commercial properties across the United States, has demonstrated a remarkable ability to maintain high occupancy rates and consistently increase dividends over an extended period. This makes it a compelling choice for investors seeking stability and steady income, particularly in the real estate sector. On the other hand, DMLP offers a different flavor in the investment world. Operating in the volatile oil and natural gas market, its performance is closely tied to the ups and downs of energy prices. While this can lead to higher potential returns, it also comes with a greater level of risk. The company's strategy of acquiring properties to enhance earnings and distributions shows an aggressive approach to growth, which can be attractive to those who are comfortable with the inherent uncertainties of the energy sector. While I have provided an overview of NNN and DMLP, this information should serve as a starting point for your research. The stock market is dynamic and conditions can change rapidly. Being well-informed and cautious will help you navigate these waters more effectively, aiming for a balanced and profitable investment portfolio. Thank you so much for watching this video till the end. If you found it at all helpful, then please smash that like button and subscribe to the channel. Your support really helps this channel grow.